Welcome back, and you're watching Markets at Noon. Markets are doing real positive rounds with the benchmarks of the broader markets and good entry opportunities in various sectors. But at the same time, what should be a longer term strategy for the market? To talk on the same, we have with us Pradeep Agarwal, MD and CEO, Motilal Oswal Asset Management Company, joining with us. Pradeep, thank you so much for giving your time to ET Now. First things first, the tariff scenarios. Tariff still is an overhang for Indian equity markets. How do you consider the situation as we do see both the countries and the representatives of the countries talking and trying to come to a conclusion to this situation?
Yes, that is the last overhang. We have seen how markets have responded globally deal and after the deal. And we do sense a deal with India is around the corner soon, and which should then keep markets happy.
Pratik, from next week, a big event is coming up from September 22nd. Do you think GST rate rationalization will be big boost for India's consumption sector?
Look at it this way, consumption is a very broad array of things. It comprises of staples, it comprises of durables, and can extend all the way up to house and telecom. Uh, what GST cut would do to our mind is to help people save some money on very highly penetrated categories, okay, and enable consumers to dip into some of the more aspirational categories. So don't really think staples benefit as much as, let's say, discretionary durables, etc. benefit. But it's a very solid cut, and it will have a positive impact.
Sure. Pratik, tell us more about your preferred sectors. Let's say from a valuation standpoint, which are the sectors you're bullish on? Where do you see and find value in this market?
No, so let's understand there are two ways of making money: buying value, buying growth. We are growth investors. And we do believe that after, now 5+ years of recovery from COVID lows, which resulted in a lot of value getting palpatably there in the marketplace, it is now time for growth. So we think there are many spaces which are offering a very great combination of strong growth sustaining for longer, which is the key attribute needed for good, strong stock performance, and we are focused there. These spaces could be spaces like electronic manufacturing. Just think what all spaces came to the market over last 5 odd years, and that's where you will get a combo of strong growth sustaining for longer. So, think of it in this manner. There was no mutual fund listed 5 years back. Electronic manufacturing, we spoke, renewables, electric vehicles, luxury, if you want to buy, that's a part which can also benefit from GST cut, etc. Defense, and of course, manufacturing. So while people celebrate consumption because of GST cut, well, stuff will have to be made in factories. They get filled. There will be capex as well. So I think the spaces which are tailwinded have several years of high growth in front are the spaces that we are very focused on.
Pratik, last time when we spoke to you, you had told us that you prefer electronic manufacturing, select defense companies, new tech renewables, EV space. Any change in preference since we spoke to you last? And for defense in particular, do valuations justify fundamental growth prospects?
So the views remain the same. Our portfolios continue to reflect all of these spaces and hospitals and GLP beneficiaries, to name a few. So think of these spaces as a part of the portfolio. All of our portfolios, most of our portfolios will have most of these spaces. That is the manner to look at our portfolios. Our whole thought is if growth as a style works in the marketplace, all spaces where growth is there, way in excess of the index growth itself, will perform, at different times, maybe one after the others. And if we have representation of all of those spaces, we will have a very good participation in the market.
Pratik, one last thing. With the kind of FIs exodus that we are seeing at present, will retail buying be able to cushion the selling? And do you expect markets to largely remain range bound in the near term?
So there are three pieces to the puzzle. FPI selling, I think we should expect it to continue, while maybe the intensity will reduce because the are going down there. Our sense is lot of people, lot of FPIs come to India for yields. They behave more like arbitrage funds rather than long only Indian equity funds. As yields globally drop, you see some of those guys come in here. They buy stock, they sell futures. And of course, currency stability helps. Second, while negative, yes, but selling pressure we expect will reduce. Domestic flows we sense are getting stronger because I think if there is positivity in the air, people want to benefit from it. So we sense that there is some positivity. Flows in September should be a tad stronger than the flows that we saw in August. And then the third piece of puzzle is a lot of paper that is coming into the market in terms of IPOs, promoter selling, PE selling, etc., etc. So, which is able to absorb a lot of the net money flows which are coming into the market. Given that the supply of paper is also very strong, ceteris paribus, one would have expected markets to be flat. But our big thought is that, more than the flows, it is sentiment that drives market. Sentiment, I sense, is turning positive.
Okay, thanks for that, Pratik.